Good morning. Welcome back to the Rogue Trader podcast. And this isn't just about gold, but it seems like that as we go through the weeks, because the product that is probably having the most fantastic gains that we've seen in some time, to be honest with you. I mean, we've got those single stocks and Nvidia and some of the others that have had fantastic growth over the last years. But in terms of an asset class, gold has gone crazy this year. Up 55% or thereabouts at the moment, setting new highs as we speak, I'm sure, because I've traded in and out of this a couple of times already this morning. And, you know, every time I look at it, it's a new record high. I think we've been up to 42.18 so far this morning, something like that. Possibly have pulled back since I've stepped away from the screen. But it's a product that, if you're long and you're holding, it is the gift that keeps on giving. If you're trying to trade it, it's very, very difficult. I was talking to Jason off air just before we came on and started this podcast, you know, selling the high yesterday, you know, clapping yourself on the back and thinking it's fantastic and everything's gonna work out well today. And then it's not too much longer and I'm selling the low. So it's one of those days. The swings that you're seeing in the market are just exceptional. You blink an eye, the market's down $15, $16. It's just crazy stuff. And I suppose, Jason, one of the first questions for you was whether you've ever seen anything quite like this in terms of the sharp swings and moves that we're seeing at the moment. You know, like gold, $100 range. I know that the Dow had 1,000-point range yesterday, and you know was very volatile on some of the things that Trump and earnings and Jerome Powell were saying. But just the speed with which gold is moving yesterday, in particular, for me was just it was breathtaking because it took my breath away. It took a bit of money away as well at the same time. But have you seen anything quite like it in the past?
It's kind of behaving like a stock index, isn't it? But then, you know, it's trading at 4,200. So it's gone up so much so quickly that a 2% move now is $80 or over $80.
Yeah.
You know, that's the reason that in point terms, these moves are just so enormous. When it was trading 2,500 and you had a 2% move, which was less common, I think then, okay, it was $50. Yeah. Now it's nearly 100. It's pretty serious. Yeah.
And I think, you know, like if I think back to, you know, when I first started out in the markets back in the 90s or whatever else, and gold was at $700 or wherever it was, you know, a 2% move was $14. And that's what I hark back to. I think sometimes you kind of, you know, obviously things do move on and progress and change and whatever, and gold is a fantastic example of that. But you kind of, you know, I'm thinking back to those sort of times when a $2 or $3 move in gold was quite exceptional then. But now, you know, you're seeing $100 move on a day, and just since the beginning of the year to be up 55%, it's just, I suppose for me, you know, it's just not a commodity that I naturally associated those sort of moves with.
Yeah, a guy in my signals group was asking me why my stops in gold have widened out so much. And I was like, well, from $5 to $10. I was like, well, you have to, you know, why do you think?
Yeah.
We're doing $10 in the blink of an eye.
Yeah.
So, it's big numbers now.
Yeah. And
it's trading like an index.
Yeah. Yesterday was just a classic example of that. You know, like genuinely it was look away, market's down $15, look away again, market's down another $15, up $10. And those swings, and for somebody like yourself who's, you know, you're trading off those levels, you place your trades, you're putting stops in. You know, obviously the best piece of advice is to keep your stops reasonably tight. Yes, you've got to, it's got to be cognizant of where the market's trading, how much it's grown, and you've got to widen those out a little bit. But in general terms, keep your stops as tight as you possibly can, and then look to make merry on the trades where you do catch the direction correctly. And try to maximize those. But I'm sure that you're getting signals that are triggering, stopped out. You're getting signals that are triggering and booming ahead. It must be very difficult to trade. How do you navigate that?
No, you're right. This morning I was stopped out on a long and a short. So it's a bit frustrating. Yeah, you've got to sit on your hands, I think, really, and just wait for good levels.
Yeah.
And of course, you've got to cut your size down. If you're used to trading one contract, you probably should be trading half a contract now.
Yeah.
Because the numbers are just that much bigger and your stops need to be that much wider.
Yeah.
Definitely cutting your size down is a necessity if you're trading gold now.
Yeah. Yeah. All right. Well, look, I mean, I think that's fair, and obviously stops are an essential part of this. And I know you're looking at a screen. I haven't got a screen open at the moment, but I'm sure gold is moving around at the moment. Would you give us a couple of ideas about what levels you're looking for next? Gold, I mean, I'm sure that it's just a case of the trend continues. It will stop at some point, but none of us are able to tell when that will be.
Well, no, yeah, I'm not going to try and pick a top. We had back here when we had some of these big red candles, bearish engulfing candles. I thought maybe that was indicating we'd run out of steam. We were going to start trading sideways. But of course, we eventually just burst through that high that was 40.59, went up. Another big down move. That was yesterday. I'm looking at the 4-hour chart here. So I think that's going to continue. I think we're going to get these big downdrafts, but you will get buyers. So if you just shut your eyes and buy with a stop and then buy again with a stop, you'll probably catch a decent upswing eventually. You might have to have 2 or 3 goes at it. I've put Fibonacci projection lines on now just to give us an idea of where we could get to. And 42.45 looks like a reasonable target. Well, it's not that far away, as it seems so far away. We're at 42.18, but it's 25 points away. But that's what's that? It's less than half. It's just over 0.5%, isn't it?
Yeah, it's crazy. Even when you think, when I woke up this morning, I think gold was again around 41.80, something like that. So it's added $38. Not necessarily in a blink of an eye. It's taken a couple of hours, but it's still a serious move to the upside. And if you're on the wrong side of it, obviously it's very, very difficult. Just in terms of the way, and I know this isn't something you necessarily look at, but just in terms of the way that it's trading. For me, it looks like there's not a great deal on the bid and offer. We're jumping around so quickly. You're moving from, let's say, 41 or 42.11 to 42.12 straight away. There's nothing in between. There's no real price action in between the two different levels, and that's adding to some of the difficulties that you're seeing when you're trading.
Yeah, it's definitely a time, I think, as I said earlier, to be sitting on your hands more than getting. It's too easy to get over involved in this volatility, and I don't think that's what you should be doing at times like this. Well, I just put the 30-minute chart up just to show some of these candles. Actually, it'd be interesting to look at that point, Nick. What are we doing in a 30-minute candle? So, 15 points looks like a pretty normal. 15, maybe $20. Is looking quite average for a 30-minute candle. It's pretty tasty.
It's crazy stuff, yeah. Like a great opportunity to make money, great opportunity to lose the house at the same time.
Blow some.
So I think the message there, as you've said and you've repeated a couple of times, is sit on your hands and wait to get involved. I mean, I'm one of those people that are, continually getting involved and see myself getting dragged into the mire more often than not. Can we have a market that has been a little bit more orderly of late? We had Trump coming out with these announcements on Friday, 100% tariffs on China, potentially coming back on that or pulling back on that announcement a little bit over the weekend. But Bitcoin, it's still, I'm still sure it's still trending higher. There's been a bit more consolidation over the last period. I think I saw. Again, it had a very big move off of the Trump announcement on Friday. I think it went from about 119 down to about 110 over the weekend, but has started to recover and is back up around that 112 number at the moment, something around there. But just your views on Bitcoin, a couple of targets, and then we'll probably end it there.
That's a little bit more confusing, but let me give it a go. Where are we now? Let's just try and share the screen. Right, here we go. Okay, Nick. As you can see, since I would say middle of May, we've really only gone sideways. So on the 22nd of May, we were trading at 112,000, which is just about where we are now.
Yeah.
So therefore, trend-wise, it's difficult for me to decipher short-term. You can see I've littered my screen with trend lines trying to figure it all out. Not sure it's done me any good. I mean, eventually, no, I see this as a consolidation. I can't put my finger on a pattern despite all my trend lines, but I think it's a consolidation, and I think eventually we will break up through 126. That's the high, isn't it? 126 to 223. But timing wise, I have absolutely no idea. We've only really recovered half of that sharp drop that we saw last week from 126 to 105. Yeah, sorry, it's a bit of a wishy-washy comment, but it's not giving me anything that I could, there's nothing in the chart that I could give you any useful indicator, if I'm honest with you.
No, look, I mean, that's fair enough. And it's, so probably another one of those markets at the moment that you want to sit on your hands a little bit and wait for that next clear direction. You waiting for a signal and see where we go from there.
It's interesting that we clipped the red 200-day moving average,
right,
and bounced off it. So maybe that was somewhere where some buyers were sitting. Yeah.
And obviously the key moving average really that a lot of traders look at when they're trying to decipher these markets and looking at those moving averages, the 200 is the one that gets most attention, I suppose, from a real solid support or resistance sort of level. Bouncing off that obviously is a key level to look at. All right, thank you very much, Jason. Really grateful of your time again. We'll be back talking gold again. I'm shortly. Reminds me of a story. One of my youngest son wanted a fairly big gold chain for Christmas a few years ago. I want it back. It's gone up 50% this year already. So
he's probably made more than you had.
It's brilliant, isn't it? That's what I should have done. I should have just bought a few more gold chains when I was in Dubai and sat on them.
You could have walked around like Mr. T and made a fortune while you were doing it.
Loads of them around my neck. All right. Jason, it's a pleasure as always. Thank you very much.
Cheers, Nick.
All right. Bye-bye.